how much of a factor is sports betting in these conversations, and in general, how will you leverage both ESPN and ABC to capitalize on the growing legalization and adoption of sports betting? And then just back to parks for 1 second, can you talk about how attendance relates to capacity? I mean, you're only at capacity a few days a year. So is there any way you can frame that relationship? If you allow 35% capacity, is that, 70% of attendance?
Okay.
So Jessica, I'm going to let Bob take the sports question, and then maybe Christine will start with the parks question. But Bob, I'll turn it over to you.
Okay, so I'll take the sports. ESPN is always a consideration whenever we look at rights going forward. In terms of the Super Bowl being down, and as we're going into rights conversations with them, it's obviously something we're considering, but more important than any one Super Bowl, we're looking at the long-term trends of sports viewership, the MVPD universe, and our own prospects of potentially a more true ESPN DTC service. So there's a lot of moving parts and a lot of elements in that mix, but it's all taking into account the trends that we're seeing in the marketplace. What I will say is that, we've had a long relationship, say, with the NFL, and, if we have a deal, if there is a deal that will be accretive to shareholder value, we will certainly entertain that and look at that. But our first filter will be whether it makes sense for our shareholder standpoint going forward. In terms of sports betting, as you probably know, we already have some programming on ESPN around the subject of sports betting. It particularly is attractive to the younger, very passionate sports audience that we find. So it's an important piece of what we're doing. We've got relationships with DraftKings and Caesars. We've got sports links with sports betting links with both of those, not branded Disney or ESPN, obviously, but branded through their own offerings. We've got a studio in Las Vegas with Caesars that we're working on. And, we've also got a variety of different things that we're entertaining for the future. So sports betting, we do realize the value in that. We've obviously got some bumpers in terms of our own brand and what we think our own elasticity is in terms of us participating in such endeavors. But we're highly interested in taking the relationships that we have with both parties and taking them to the next level, if that makes sense.
Football and other sporting events, with lower rights costs being partially offset by lower advertising revenue. In Q2, we had only one CFP game, which was the national championship game. This compares to 4 games in the prior year, 3 CFP bowl games, and the national championship game. Our broadcasting business will be negatively impacted in the second quarter due to lower political advertising versus the prior year, in addition to the shift of the Academy Awards to the third quarter. We expect direct-to-consumer operating results in the second quarter to improve modestly versus the prior year quarter, as improvement at Hulu and ESPN Plus will be partially offset by increased content investment to support the expansion of Disney Plus. We expect that Walt Disney World attendance in the second quarter will be impacted by typical seasonality headwinds, in addition to continued COVID-related headwinds and capacity constraints. Our current expectation is that Disneyland and Disneyland Paris will be closed for the entirety of the second quarter, but we are hopeful we will be able to reopen Hong Kong Disneyland during the quarter. We have refined our capital spending expectations, and we now expect CapEx in fiscal year 2021 to be roughly comparable to fiscal 2020 spending. Compared to 2020, we still expect to see increased investment at DMED in corporate and reduced spending at DPEP.
Bob, I know visibility is limited, but can you tell us how you think about the parks through the rest of this year? In particular, Christine mentioned strong underlying demand, but do you expect to be able to increase capacity limits and fulfill that demand? And as you do, are there things that you've done on the technology or cost side that can help us think about the ramp back to break even? And then I was just wondering, Christine, is there any way for you to help us think about the sports rights in fiscal 21 versus fiscal 20? There's been so much movement in number of games between the 2 years, and obviously these are big dollars for the company. I'm just wondering if there's any way you can help us think about that, maybe on an annual basis. Thank you both.
Okay, Ben, thank you. So, Bob, why don't you take the first question about parks, and then we'll go to Christine on sports rights.
Okay, in terms of the outlook for the parks for the rest of the year and the capacity, it's really going to be determined by the rate of vaccination of the public. That to us seems like the biggest lever that we can have in order to either take the parks that are currently under limited capacity and increase it, or open up parks that are currently closed. So that is sort of the gating factor, if you will. As Christine suggested, we have ample demand for our parks. Despite everything that's happening with the pandemic, I think we've made a pretty big impression on our consumer base and prospective guests in terms of the safety measures that we've undertaken at our parks to give assurances to people that they should come in and bring their families. And we're very, very pleased with what we're seeing in terms of future bookings. In terms of the cost savings and the technical side of things, not only has our industrial engineering team at Walt Disney World and some of our parks like Shanghai across the world figured out ways to have increased capacity with the same safety measures that we've had in place, which has enabled us to increase our if you will, our attendance. But we have been able to substantially manage our cost side at the same time and to right size, if you will, our not only our fixed cost base, but also our variable cost base to match what's happening. And I think that's evidenced by what Christine said, that all of our parks, regardless of what conditions they're operating under, assuming they are operating, are in positive net contribution aside. I would also add, you didn't mention this, but I think it's important to add that given those per caps that Christine referenced in terms of the double-digit increase in per caps, this is sort of the ultimate situation where demand is exceeded supply.